Hi there, traders. This is Brad Gilbert with an early Trump tariff update right now. So, Trump has given everyone basically all imports to the US a 10% tariff, right? And then he's given what he calls the worst offenders increased rates from that level. So, if I just sort of scroll down here, you'll see there's starts to list a lot of the countries, and a lot of the Asian countries, some African countries. You're looking at 30%, Cambodia 49%, Switzerland 31%, China is 34%. So basically, a lot of the countries that have really low labor costs are now going to be tariffed, right? It really equalizes or balances out the labor costs in the US to all these lower production countries. That gives the US an even playing ground. Now, what we are going to be seeing over the course of the day is, some sort of retaliations, right? All plans. I mean, the media sort of really pumps it up as a war, right? Retaliation, this and that. The UK are resolved to getting a deal. The EU have got some plans. I mean, what are they going to tariff? Like they're anyway, it's sort of a little bit innocuous. The key thing to understand is the all these other countries that import stuff to the US, they need the US, right? The US do not need them as much as they need the US. So that's the key thing, that the US has the footing. Now, I was just saying there on the Discord, just be aware. I mean, it's already come and gone, but at 5 p.m. New York, you're going to see some big spikes, low liquidity. There's not much liquidity around at the moment on a big release like this because no one knows where the instruments are going. So you've seen on some instruments 100-point price spreads. Now, if you've got an order up the top, let me just explain this because I already had one guy asking me. I had an order here in the Aussie up around 63.30. I didn't get set. No, you don't get set because the bid and the offer are as wide as can be, right? So the bid has to be above that level for you to get set if it's a sell order. So you're not going to get set on any of these levels. The only thing that is going to happen is if you've got orders in there, pending orders, say with a 50, 60 point um, level above or below your levels, you're going to get stopped out. And that's why you don't have random orders in the market when there's a major event like this. It's quite clear uh, what happens. So anyway, I feel badly for the traders that have been caught up in that, but that is just general knowledge. Now, the equity markets, okay, in the States, a little bit up and down, right? The S&Ps were down about 2%. They've come back a little bit. We're going to see how these global equity markets hold up, right? There should be a sea of red here today. The currencies, well, you know what? There's a sea of red there as well. And this is the one thing that we have to sort of really focus on is US Treasury yields are lower, right? That means the US dollar should go down. We want to see that appear in the major currency section there. If the dollar pairs go down and Euro, Sterling, Aussie, Kiwi go up, we are looking for trading opportunities. If it's not like that, then you need to wait, right? Because the dust needs to settle on an event like this. It's a repositioning of the global markets, right? And what we're talking about is you might see a shift in the global 10-year bond markets. You're going to see a rebalancing of a lot of the equity markets. And then we'll see where the fair value of the currencies is, right? There's no need to rush in. The good news about all the tariffs, right? If I had to sort of look at a positive here, the central banks don't know what's going on, right? As in, they don't know what to expect from the tariffs. The governments and everything else. It's like, okay, we know in the past if they've put tariffs on, inflation's gone up, growth's gone down. So equity markets should get hit. Inflation, well, the central banks have to sort of deal with that, but they could be cutting rates sooner than later. The good news is all the economic fundamentals that we monitor the market around and look for direction are going to be super active, right? The central banks look at the economic numbers. So from this point forward, right, it's a bit too early, obviously, today, right now, to sort of get the data happening now. But from this point on, when we start looking at CPI numbers, employment numbers, retail sales, they are going to be extremely active. We're going to have a front row seat here to where direction's coming from. You're going to be able to see it. The central banks will confirm it, and we're going to have some great trading opportunities because, once everyone's come through, they've done their retaliatory Can't even say it properly, but put their tariffs back on the US. Okay, now let the dust settle. Now let's look at the numbers and see what's going on from here. Now, this does have a bit of an implication for, today, this week's non-farm payrolls. The tariffs trump, excuse the pun, trump everything that is happening at the moment. So the geopolitical event will definitely take control here. Will we see some movement? Maybe, but really, I'd say it's from this time on, next month, the month after, excuse me, we are going to see some really good changes in the fundamentals with these tariffs, and it's game on. For me, I think this could be a really golden period for trading. Um, it may not start until about a month's time. Okay, I think we'll start to see the market repositioning very quickly. We'll start to see some clear direction here on the US dollar. Safe havens when they come into play, risk on, risk off. All these different variables will start to come into play. We will have much clearer idea of where the trend is really going to run, right, over the coming weeks and months, right? So you're not going to see the impact straight away, but we are going to see it as we go forward. So all you need to be doing is like staying out of harm's way. Do not get involved when there's no liquidity, like these price spikes. Keep an eye on your daily charts because we're going to see some big shifts in trends. Okay, I know some of the trends are already in play, and that's to do with that 34% tariff on China, definitely impacting Aussie and Kiwi. You'd throw the cat in there as well, the commodity currencies. The dollar, what's it going to do? Well, we'll find out as the fundamentals start to roll out from this point on. Okay. So don't get disheartened. Don't think, oh my God, these markets are too tricky. Yeah, right now they are, but it's going to get a lot better very quickly. All right. That's my 2 cents worth. If you've got any other opinions, jump on the Discord and let's thrash it out because I'm pretty excited and pretty pumped for what's to come. All right, guys, have a good one. All the best. Cheerio.